Hey everybody, it's Alex here. So I was browsing the web and I came across the craziest thing I have ever seen. Today I'm going to show you how to get $300,000 from credit card rewards thanks to a year of spending many millions on a reward credit card by spending without spending, aka manufactured spending. Sounds crazy, but trust me, it's possible. If you are new to this channel, a warm welcome, and hopefully you will find answers about credit cards, saving money, growing your income, investing wisely, and saving for retirement. So without further ado, let's dive in. Earning cashback rewards is the main focus on this particular drama, so stick with me until the end of this video as I'm going to explain the theory behind it, how it works, and if this is a way to earn unlimited money. According to Wall Street Journal, Konstantin Anikiev is a physicist by training, but he assembled materials for a project that was anything but in his field. The government stance on the credit card rewards being income excluded, as well as his own willingness to buy gifts and money orders were all used as part of his material. See guys, he got an idea from personal finance websites, so he took advantage of the fact that you can actually earn unlimited 5% rewards on gift cards and money orders while paying lower fees. So the question is, did it work? Well, it worked, at least for the most part. Okay, so what happened? In an IRS audit in 2013 and 2014, Mr. Anikiev's financial optimization plan of charging more than $6 million to his credit card led him and his wife to discover that they actually were on the hook for $300,000 in Social Security checks. So, as the judge ruled last month, credit card rewards are usually non-taxable rebates as dictated by IRS tax rules. In other words, when you purchase $100 worth of shoes and get a 5% reward, you actually pay $95. Although he also offered a number of areas for IRS enforcement, the judge emphasized that tougher enforcement should be considered by Congress as well. Going back to Mr. Anikiev now, during his graduate studies, he had plenty of time but limited resources. So he testified at his 2019 trial that he drew upon ideas from personal finance websites. Now, in 2009, he was one of many who took advantage of the low shipping rates of $1 coins while buying them through a rewards credit card. Many members of the frequent flyer program have come up with all kinds of ridiculous ways to rack up credits, but few have been as straightforward as turning coins into miles. There were at least 30,000 users who discovered that a free shipping offer on $1 coins featuring presidents and Native Americans, sold at face value by the US Mint, was actually free frequent flyer miles. So millions of coins were ordered by mileage collectors until the Mint started identifying them and cutting them off. These coins were sold in boxes of 250 coins, and buyers charged the purchases to an airline frequent flyer credit card and then turned them into receipts to the bank. Their credit card bills were then paid with the coins they deposited. They only had to pay for the card trip to deposit the funds. That was 2009. In 2013, Mr. Anikiev landed himself in tax court after discovering the right strategy for unlimited rewards. With his American Express card, he was able to earn unlimited 5% rewards every time he spent $6,500 at grocery stores and pharmacies. So during his commute, Mr. Anikiev would stop at shops and buy the daily maximum of prepaid Visa gift cards allowed on his Amex card. The cards were often used to purchase money orders, then the money orders were used to make deposits in his bank account, then he would use the money to pay his credit card bills. With a $500 commission, the 5% bonus would yield $25, which would cover the gift card fee of about $5 and the money order fee of $1. Now, according to an IRS attorney examining the case, the millions in cash transactions caused the Financial Crimes Enforcement Network to alert the Treasury Department, a government agency that investigates money laundering. The IRS said he owed back taxes after the agency kicked the case to it. Now, anybody can generate rewards by manufactured spending without actually having to dip into your income to pay for the transactions. The purchases can be used to pay your bill if you convert cash into your account. The government sued Mr. Anikiev, who proved what he did by bringing a tub of gift cards to his trial. Now here is the crazy part. Mr. Anikiev came well prepared with all the papers and receipts ready to challenge the IRS. So the judge issued a split ruling. Buying Visa gift card is regarded as a purchase for income tax purposes, so rewards earned aren't taxable. Most of his transactions were through such cards, but not all. So he then said reward money earned from buying money orders or refilling debit cards can be taxed. According to the IRS, rewards that are not spent can be taxed, such as bonus for opening a bank account. So in this case, both sides still need to determine what additional taxes Mr. Anikiev might owe. Now, Mr. Anikiev stated that he was somewhat disappointed. According to him, the judge's distinctions ignore the fact that the IRS classifies money order businesses as services. However, money orders are regarded as items and therefore the rewards are not taxable. The judge suggested a means for the IRS to further investigate future examples of Mr. Anikiev's transactions. As he argued, the rewards might be deducted from a person's cost basis in the gift card as if it were property. That logic would suggest that exchanging gift cards for money orders would be the same as selling property. It is important that the IRS consider rules or public statements that make clearer rules for people in case they are confused. According to Stephanie Hofer, a tax law professor at Indiana University McKinney School of Law, the IRS approach to credit card rewards has major flaws. She says that treating them like rebates makes sense if you are going to buy products. With Mr. Anikiev though, there is no specific purchase of goods or services, just a circular process of payments. His lawyer actually said he is a brilliant person who just did something he thought was fun. This is crazy. The most interesting part of the case is that the consumer essentially won the case against the IRS and will not be required to pay any taxes on all rewards earned. Now, this sets a significant precedent. Typically, rewards from credit cards are not taxable. So as a result, if you spend $1 million, you actually do spend $1 million, but earn 5 million points back, the IRS won't tax you for that 5 million points as an income. A rebate is an income, it's just rewards. However, if you aren't spending the money and no actual products are purchased, but rather just effectively purchasing monetary instruments on your credit cards, then that could potentially become an issue. Banks are targeting these accounts, making it harder for them to use their credit lines through cash-like transactions. But what if this isn't really about getting a reward, but really about laundering money? That would result in a bank having a customer who may have little or no income, who has substantial debts on their credit cards, which could be unrepayable in a timely manner, or worse, the bank has committed an illegal act. Now, although Mr. Anikiev was largely vindicated by the judge ruling, I would personally not encourage this kind of practice. With that being said, thank you so much for watching. I hope you had a great time. So if you did, please don't forget to crush the like button if you got any value from this video. It's 2021, so please subscribe if you aren't already, and I will see you soon.